markets because we have that rally and it's still in place. Dow's up close to 400 again. Jeffrey Small's with us this morning. Let's look forward to Apple this afternoon. I don't think that Apple is your favorite big tech stock, is it? Why not?
Well, not at this time. Apple really comprises 7.3% of the S&P, so we really need them to have a good quarter, Stuart, but their earnings have been declining for 4 straight quarters, and every component of their revenue model has been dropping over the last 9 months, from wearables to iPhone sales to iPads. And in August, they gave us a warning that iPads and iMacs were going to be dropping by double digits in sales this quarter. And so in the short term, there's a lot of risk with Apple because it's really overpriced.
Okay, so which is your favorite big tech stock?
Well, I think that the 2 favorites out of the FANGs, and the fundamentals for most of the FANGs remain relatively strong, but I really like Meta because they blew out earnings, and they're really priced about 5% below S&P multiples right now. I also like Amazon a lot better, too, because they're growing double digits across their entire revenue platform, and their earnings went up 20% in this most recent quarter, and that's why you see those stocks moving.
Would you buy both of them, Amazon and Meta?
I think you buy what's growing in this environment. And, you know, we're coming into an environment that's going to be more challenging as time goes on. The economic data is going to get worse quarter over quarter, month over month. That's why the Fed didn't take action yesterday. So absolutely, these should be your core holdings at this time. This is the gold in the gold mine that you want to harvest in your portfolio, Stuart.
You have not mentioned Microsoft, which is disappointing since I own a thin sliver of Microsoft. What do you got to say about MSFT?
You know, funny story, in 2015 when I was on with you, you asked me, Jeffrey, what is Microsoft going to do? And I told you it was a good long-term hold, and the cloud exploded, and it was at $30 a share back then, and look at it today. It's over $330 a share. So Microsoft is a great AI play. They have great fundamentals, and they really should be included in that Meta and Amazon component of your portfolio.
Real fast, while we have you, can you explain the sharp decline in Treasury yields, which really is helping big tech?
You know, that was music to our ears, and it's music to the market's ears. And I have to congratulate, you know, the Fed chairman for doing what he did yesterday, because nobody believes they're going to raise rates anymore, Stuart. That's why they're letting some pressure off of the gas pedal, but they're alluding to the fact that they want to raise rates if it's necessary in the future. We know they're done. The market sees rates dropping in June of next year and organically dropping 100 points over the next 3 to 6 months, which means we're going to have a rally going into year end because of the rate cycle.
Music to our ears. Jeffrey Small, thank you very much for being with us. See you again real soon.